Both companies are deeply connected to the accelerating global adoption of artificial intelligence, a technological shift that is reshaping nearly every industry. While they operate in very different segments of the technology stack, each plays a crucial role in enabling artificial intelligence to scale efficiently across the global economy. Palantir Technologies focuses on the software and execution layer of artificial intelligence. The company builds advanced platforms that integrate massive volumes of data, analyze that information in real time, and help organizations make complex decisions with confidence. Its technology allows enterprises and government agencies to turn raw data into actionable intelligence that directly impacts operations, logistics, finance, and strategy. In contrast, ARM Holdings operates at the foundational hardware level. The company licenses highly energy-efficient processor architectures that power artificial intelligence workloads across smartphones, tablets, cloud servers, edge devices, and data centers. Even though their business models are distinct, both companies occupy critical positions within the artificial intelligence value chain and benefit from surging demand for intelligent computing from corporations, governments, and consumers worldwide. As artificial intelligence adoption continues to expand, Palantir has deliberately positioned itself to benefit from the structural changes occurring within the artificial intelligence economy. At the center of Palantir's approach is its artificial intelligence platform, which enables organizations to structure and organize vast data sets spanning financial records, supply chains, operational systems, and human resources. This structured data environment allows artificial intelligence systems to reason, recommend actions, and even execute tasks with far greater precision. Palantir's ontology-driven framework creates a digital mirror of an organization, allowing artificial intelligence to understand how different parts of a business relate to one another and how decisions ripple across the enterprise. Rather than flooding the market with yet another artificial intelligence model, Palantir concentrates on making artificial intelligence usable, actionable, and embedded directly into real-world workflows. This focus places Palantir squarely on the demand side of artificial intelligence adoption. Many companies compete to build models, chips, or infrastructure, but Palantir specializes in turning artificial intelligence into a practical tool for decision makers. That distinction matters, especially as enterprises shift from experimentation to full-scale deployment. Once Palantir's software becomes embedded in mission-critical operations, switching costs rise dramatically, creating long-lasting customer relationships and durable revenue streams. Palantir's strong financial position further strengthens its investment case. The company reported $6.4 billion in cash and equivalents on its balance sheet and carried no debt. This level of financial flexibility provides Palantir with ample resources to fund expansion, invest in research and development, and pursue strategic growth opportunities without relying on external financing. A debt-free balance sheet also reduces risk during periods of market volatility, giving the company resilience as it scales. Recent financial performance highlights how effectively Palantir is executing its strategy. During Q3 of 2025, the company delivered revenue growth of 63% year-over-year, an exceptional pace for a business of its size. Revenue generated in the United States increased 77% year-over-year, reflecting strong domestic demand. Even more striking, United States commercial revenue expanded 121% year-over-year, signaling rapid adoption among private sector enterprises. These results indicate that Palantir is no longer viewed solely as a government-focused provider, but increasingly as a core enterprise software partner. Deal activity during the quarter further underscores this momentum. Palantir closed 204 contracts valued at least $1 million, demonstrating broad adoption across customers. Within that total were 91 contracts worth at least $5 million and 53 contracts exceeding $10 million. This mix of deal sizes reflects both expanding relationships with existing clients and successful onboarding of new large-scale customers. Profitability has also reached new milestones. Palantir achieved its highest adjusted operating margin to date at 51%, highlighting the scalability of its software-driven business model. High margins indicate that incremental revenue flows efficiently to the bottom line, a key characteristic of elite software companies. Operating income under generally accepted accounting principles reached $393 million, while net income under generally accepted accounting principles totaled $476 million. These results translated into earnings per share under generally accepted accounting principles of 18 cents and adjusted earnings per share of 21 cents. Adjusted earnings per share grew 110% year over year, reinforcing the strength of Palantir's operating leverage. Turning attention to ARM Holdings, the company's competitive advantage lies in its ability to deliver high-performance computing with minimal energy consumption. This strength has long made ARM the dominant architecture provider for mobile devices, but its influence now stretches far beyond smartphones and tablets. ARM's designs are widely used by leading technology companies that require efficient processors capable of handling increasingly complex artificial intelligence workloads. As artificial intelligence becomes embedded across consumer electronics, vehicles, industrial systems, and cloud platforms, energy efficiency has become a defining constraint. ARM's architecture is uniquely suited to this environment because it balances performance with power savings. This makes it ideal for artificial intelligence workloads running on edge devices, wearable technology, and massive cloud infrastructure alike. Major technology companies continue to build their next-generation processors on ARM-based architectures as they integrate more artificial intelligence functionality into their products. The reliance of these global technology leaders on ARM Holdings is not only persistent, but strengthening. As artificial intelligence models become more sophisticated and more widely deployed, the need for power-efficient computing grows. ARM's ongoing efforts to optimize its architecture for machine learning and edge computing ensure that it remains closely aligned with the evolving requirements of its largest customers. This positions ARM as a critical infrastructure provider within the artificial intelligence and Internet of Things ecosystem. Over time, ARM Holdings is evolving from a company best known for mobile computing into a foundational layer supporting artificial intelligence and connected devices across the global technology landscape. This evolution solidifies its strategic importance and provides a steady stream of licensing and royalty revenue as artificial intelligence adoption expands. When comparing expected growth, the contrast between the two companies becomes clearer. Consensus estimates for Palantir Technologies indicate 2025 sales growth of 54% year over year and earnings per share growth of 78% year over year. Analyst expectations for Palantir's earnings have continued to move higher over the past 60 days, reflecting improving confidence in the company's trajectory. For ARM Holdings, consensus expectations for fiscal 2026 point to sales growth of 21.5% year over year and earnings per share growth of 5.5% year over year, with estimates also trending upward, though at a more modest pace. Valuation metrics provide additional insight. ARM Holdings currently trades at a forward 12-month price to earnings multiple of 52.93 times. This is significantly below its historical median of 121.35 times, suggesting that the stock may be attractively valued relative to its own history. Palantir Technologies trades at a forward 12-month price to earnings multiple of 177.24 times. While that valuation is higher in absolute terms, it remains below Palantir's 12-month median of 308.7 times, indicating that the stock has already undergone a meaningful valuation reset. In the current artificial intelligence-driven market environment, Palantir stands out as the more compelling option for investors seeking direct exposure to artificial intelligence as a business driver. While ARM Holdings benefits from long-term infrastructure demand, Palantir is deeply embedded in the execution layer where artificial intelligence directly influences decisions, outcomes, and profitability. Palantir's platforms are already integrated into mission-critical commercial and government operations, creating a durable demand and significant switching costs that are difficult for competitors to displace. Palantir's emphasis on operational artificial intelligence places it at the front lines of adoption rather than positioning it as a background technology supplier. With stronger revenue momentum, faster earnings growth, clearer artificial intelligence monetization, and a ZAX rank of number 2, indicating a buy rating, compared with ARM Holdings holding a ZAX rank of number 3 indicating hold, Palantir offers greater upside potential for investors who want exposure to artificial intelligence as a transformative force reshaping how organizations operate and compete. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.